$4,800. That's the amount the average first-time homebuyer overpays in origination fees without even knowing it. You think you're paying 1%, but research shows you're actually paying closer to 3%, and lenders won't volunteer that math. In the next 5 minutes, we're going to expose exactly where that 300% markup hides, show you the federal data proving it, and give you 3 specific negotiation tactics to get your origination fee cut in half before closing day. Here's what most buyers believe. Mortgage origination fees are standardized around 1% of the loan amount. On a $200,000 mortgage, that means $2,000 in origination costs. Simple, right? Wrong. According to the Consumer Financial Protection Bureau's most recent mortgage fee analysis, lenders are charging origination fees up to 3% of the loan amount. That's $6,000 on the same $200,000 home. The delta, a $4,000 difference. Not per month, not per year. At closing, in one lump sum, let's break down how this actually works. On your loan estimate, that's Form 1008, which lenders are required to provide within 3 business days of application. Origination fees appear on line 1001. This line item is where the lender's markup lives. Federal Reserve data shows the national average origination fee sits around 1% to 5% of the loan amount. But if you shop around right now, you'll see quotes ranging from 5% all the way to 3%. Here's where it gets worse. That 3% figure isn't rare. The CFPB found that 1 in 5 borrowers paying through a mortgage broker, not directly to a bank, end up with origination fees exceeding 5%. On a $300,000 mortgage, that's $7,500 instead of $3,000, a $4,500 difference. That money doesn't go toward your down payment or closing costs. It goes straight to the lender's bottom line. Why does this happen? Lenders use origination fees as their primary profit margin when interest rates are competitive. When you're shopping rates and finding similar pricing across 5 lenders, the one offering the lowest rate often pads the origination fee to compensate. You're comparing apples to apples on the rate 8% versus 85%, but you're completely ignoring the actual cost side. Here's the federal requirement most lenders count on you missing. The Truth in Lending Act, TILA, mandates that lenders disclose the annual percentage rate, or APRA, which should theoretically roll all fees into one comparable number. But borrowers almost always focus on the interest rate, not the APRA. The APRA is where the origination fee's true cost becomes visible, but by then most buyers have already mentally committed to a lender based on the rate quote. Now, the 3 negotiation tactics that actually work. First, get written quotes from at least 4 lenders and specifically request that origination fees be itemized separately. Don't let them hide it in an all-in quote. Ask each lender, what is your origination fee as a percentage of the loan amount? Write it down. You'll immediately see the spread. If lender A is 1% and lender B is 5%, that's a $3,000 difference on a $200,000 loan. That's negotiable. Second, once you've identified the lowest fee lender, take that quote to your top choice lender and say this: I have a competing quote at 75% origination. Can you match it? Most lenders will. They won't advertise it, but they have flexibility on origination fees. They'd rather lock your business at a slightly lower margin than lose you entirely. National Association of Realtors data shows that borrowers who ask for a fee reduction get one roughly 60% of the time, and the average reduction is 25% to 5%. Third, ask if your lender will credit back part of the origination fee in exchange for a slightly higher rate. This is called a lender credit, and it's disclosed right on the loan estimate. If you're locking in at 8%, the lender might say, we'll credit back $2,000 of your origination fee if you accept 95%. That's a 15 basis point rate bump, which costs you about $25 per month on a $200,000 loan, but you save $2,000 at closing. Over a 10-year hold, you're ahead by about $1,700 in today's dollars. The bottom line, that $4,800 difference between a 1% origination fee and a 3% origination fee isn't invisible. It shows up on line 1001 of your loan estimate in black and white. Most buyers never read it closely. Don't be that buyer. If you want the full numbers and the negotiation checklist, including the exact email template to send lenders requesting fee reductions, the deep version is in the companion book Hidden Mortgage Costs. Link in the description. Biggest takeaway here: origination fees are negotiable. Don't accept the first quote. Compare at least 3 lenders side by side on origination percentage, not just interest rate. You could save $3,000 to $5,000 at closing, money that could go toward your down payment, your emergency fund, or your first repairs after closing. If this video changed how you're going to shop for your mortgage, hit subscribe. Next week, we're breaking down the PMI trap, how banks are quietly costing you $34,000 over 7 years with a strategy most buyers don't catch until year 3. Ring the bell so you don't miss it. What's your biggest takeaway from this video? Drop it in the comments. I read everyone. Smart buyers ask the right questions. Keep asking.